Have you wondered why the prices of everything is going up? This is due to inflation. Please stay and watch this video all the way to the end so you can learn more. Okay, let's get into this. When you think of inflation, think of it as when you go shopping to buy your food, do grocery shopping, and everything is so expensive that it hits you so hard, like, my goodness, everything is so expensive and you have a little bit of money. Gas prices are so expensive. Your rent is expensive. Everybody's rent keeps increasing. Mortgages are high. If you want to buy a house right now, it's not the best time to buy a house, right? Because the house prices are doubled or tripled way more than 5 or 10 years ago. So everybody is waiting, hoping that one day the house prices collapse so they can buy them cheap. The prices of used cars have increased way more than it has ever happened before. So you try to buy used car, they're gonna charge you a lot of money, very expensive. Whether you want to get brand new car, it's still so expensive. And as well as gas prices, almost $5 all across the nation. So this is because of the inflation. Everything has become so expensive. And people are working very hard on a daily basis to put food on the table, but they are struggling to do that. When you get paid, you get your money, you pay all the rent, pay all the bills, and now you don't have enough money. The money we have today now is worth less compared to the money that people used to have back in the days. For example, if you have $100 in the 1980s, that $100 had higher value at the time. People could use their money to do so many things in their era, but in our time now, it's very difficult to use that $100. Right? The $100, pretty much, you can look at it as having $10 in our time. You can buy a little bit of food for your family, and then the $100 is gone. You can take somebody to the movies with few friends with you, and you will spend all that $100 as compared to back in the days. If you take 5 or 10 friends with you, you would use that $100 and you might still have some more money left in your pocket as compared to our time. You can take somebody to dinner, just the two of you, right? Just the two of you. You're gonna go eat the food and have 2 drinks. And by the time you finish, you will end up paying $100 or more in our current time, because everything has become so expensive. And again, this is because of higher inflation. So in other words, you buy everything at higher prices and you have to spend way more money. So in other words, your money is losing its value. Inflation can be good or bad thing. Why? Because economists consider small inflation as a healthy sign of economy, while moderate inflation rate makes everyone to spend their money. Or you can also invest your money instead of keeping that money in your savings, because when you keep that money in your savings, it becomes worthless over time. It doesn't do you good anymore. The current inflation rate in the US is 8.3%. The rate tells economists how fast the consumer prices are changing. So they use this to measure using the consumer price index, also known as the CPI, and also the producer price index, known as the PPI, and the personal consumption expenditure price, known as the PCE. All of these indexes track the change in the price of consumers pay on a daily basis, as well as the amount of money companies receive from customers. Hyperinflation is when inflation rises very rapidly and the value of the currency of the country collapses. So like I mentioned earlier, the value of the money, whether you are in the US, Canada, UK, anywhere in this planet, the value of your currency will collapse, will become worthless. So this happens when the price of goods and services rise by 50% each month. And hyperinflation usually takes place during the civil unrest, during the war time. So for example, right now, there is war that is going on in Ukraine and Russia, they're fighting. And this leads to the shortage of most of the oil that is coming from Russia because of all the sanctions that were placed against Russia, and most countries cannot do business with Russia or use their oil. So this leading to us having higher gas prices everywhere. And that's another way you can tell when higher inflation happens. And another good example, if you think of maybe 1 or maybe 2 years ago when a lot of people protest back to back non-stop, it's, or if some of them could maybe destroy businesses, it leads to higher prices of everything going up. And a good example of this is that higher inflation did happen in Weimar, Germany in the early 1920s. And the price of goods rose by 10,000% each month. And this made Germany's economy to be damaged around that time. What happened? So they end up printing so much money, right? Or you can say they had a lot of supply of the money that wasn't all needed, and it made their currency to become valueless to the point that money was like nothing. You could see little kids play with the big stacks of money like this on the streets because it was nothing, right? So because of this reason why you see a lot of countries don't rush to print a lot of money just so that they could help their people to survive. When inflation is not well handled very well, right? And it is out of control, it can destroy a country's economy. And a good example of this is that this already happened in Venezuela in 2008. The inflation rate in Venezuela rose up to over 1,000,000%, causing Venezuela's economy to collapse, and many citizens of Venezuela fled to other countries, according to Forbes.com. And the next part here, we're gonna discuss it in terms of simple words, and we're not gonna use complicated language or anything. So inflation mainly is caused by the supply and demand. This happens when the prices of goods and service is more on demand, but the supply is either the same or the supply is lower. And this causes consumer goods to increase in prices. So a good example of this, I think all of us remember the start of COVID-19 all the way to now, there were high demand of food, manufacturing needs. There was chip shortage, right? There was also shortage of car productions, and more people need these because factories were also closed and we all were in lockdown. So there were no people, or there were less people needed to go to work to produce all of these that we need on a daily basis to keep our lives functioning. There was less people to do it. So therefore, we end up having high demand and low supply. And another good example I can also mention is that at some point there were a lot of cargo ships coming from Asia, and they were all parked at the port in, I believe in San Francisco, somewhere in California. And there weren't enough workers to work to take all those goods out to deliver or distribute all across the country for everybody to use. And because there was a shortage of people, this led to higher prices to consumers, making the price of goods all to go up high. Since everything is now expensive, so what do we do? How are we gonna be able to manage to survive in this inflation? Well, there are a few things we can do to beat inflation. So the best way to beat inflation is that we can invest in the stock market. And we can invest in a well-diversified portfolio in broad market index funds like S&P 500, ETFs, Vanguard Index, because there is a track record that shows that investing in these ETFs and mutual funds, including S&P 500, shows a great growth over a decade. Also, investing in bonds is another good way to beat inflation as well. However, bonds on average will give you a low return on your investment in stocks. Why? Because from 2005 to 2020, there is an annual return of 4.47% return in bonds, compared to 10% annual return when you invest in regular stock market, right? So if you invest in bonds, of course you can beat the market, but your returns will be very low. So again, you have to do your research and find out which investment type would be better for you before you make that decision. And again, all of this I'm saying is not an advice for you to go and jump to invest in the stock market or to invest in bonds because you think you beat inflation, right? So that's for educational purposes. So keep that in mind and take this with a grain of salt. Well, you might ask, if everybody is suffering and the cost of goods are so expensive and most families can afford everything, then why can't the government print more money so that we all can have more money and, maybe live better lives, right? You might ask that. The answer is very simple. If the feds print more money, there will be a lot of money circulating in the economy. And if all that money is not needed, over time, the dollar will become worthless. And then it has no value. And then it will make the country's economy worse. Right? So if you make the country's economy worse, then what happened to the country's economy? The country's economy will collapse. So would you want that? I don't think you want that. So this is the reason why you see the government is very restrictive of printing more money. If it's really needed, definitely they do print money. If you think about when they was giving everybody stimulus checks, what happened? They printed more money to help with economy because all businesses, corporations closed down due to the lockdown we all were in. So that's the only time the government could print more money to help out. But when everybody, we are now open and people have to try and make the ends meet. So if Feds just go in there and print more money and dump into the economy, then it's also bad for the economy. So that's the reason why they couldn't do that.